Good afternoon, traders. John Caruso coming to you for the afternoon of October 11th, 2016 with your currency update for the day. First, we'll take a quick look at the equity markets. Equity markets are selling off. We're seeing about a 1.5% decline from the broader indexes here in the United States. That's a direct result of Chicago Fed Chief Evans last night gave a speech in Australia, and he made mention that he is fine with an interest rate hike come December. So you get that coupled with a shaky start to the earnings season yesterday with Alcoa reporting, and there you go. You have a 1.5% decline on a hawkish Fed. So the bottom line is right now, the Federal Reserve, I don't know what kind of game that they're playing at the moment, but they've pivoted between hawkish and dovish and back to hawkish now 6 or 7 times throughout the year. Okay, so what they're trying to do is they're trying to somehow smooth economic gravity right now as the data here in the United States, as well as global growth, continues to decelerate. So it's in my opinion that they will have to move back to dovish as we continue to see the economic news come out a little bit on the light side. So what do you have going on with currencies right now? On the talk of interest rate hikes, you have a very strong US dollar that's up 75 points right now. That is also creating a very heavy drag on the corporate profit cycle right now. Strong dollar does not necessarily bode well for corporations trying to do business overseas. It makes their exports much less attractive. So you've got the euro currency obviously losing by default on the strong US dollar. Going back to the US dollar, I do believe we are near-term overbought and potentially could be in a good area to become near-term bearish on the US dollar as we start to approach that 98 resistance area. So keep that in mind. We're also going to take a look at the British currency as well, the British pound. 121.37. If you look back at last Thursday, the disastrous more than 600 point decline that we saw in the after hours on Thursday night, a lot of the media has been blaming the algorithms and the high frequency trading machines. But in my opinion, that's a direct result of just incompetency from the Bank of England and this just blatant currency devaluation that we're seeing from just about every central bank around the globe right now. And then, you mix that in with a thinly traded market in the after hours, the high frequency trading and algorithm machines, and boom, you get a 600 point decline in the British pound. So very, very ugly. I do think the British pound is becoming near-term oversold though. Perhaps off of 121 might not be a bad place to become near-term bullish just for a trade. So keep that in mind. And also, we're looking at, obviously the British pound is coming off because the Bank of England is very, very concerned about a potential for a recession as well as a hard landing for the Brexit. So, there's a lot going on out there. We'll keep an eye on retail sales as the week moves on, and we also do have a host of more Fed speeches throughout the week, and I believe we're ending with Janet Yellen on Friday. So keep that all in mind. If you have any questions, would like to reach out to me at the trade desk regarding some of the currency markets, my lines are always open. Give me a call. Thank you.